The wealth building game is as old as time. It's as old as time. The elite, the wealthy, the giant corporations like BlackRock, they all do these things, especially since the dollar has been depegged from gold. It's not backed by gold anymore, right? So the dollar inherently no longer has any more value than just, it's getting inflated away to oblivion, to negative infinity, right? And so that's the game. So what are the wealthy doing, and how can you apply what the wealthy do to your situation, more specifically with cryptocurrency? And I'm going to show you exactly how this translates, and you can take your crypto portfolio from like mid, hoping and praying, to actually giving you returns that are meaningful and will change your life for sure. In the wealth building process, these companies, rich people, the elites, they buy their appreciating assets, whether that's stocks, whether that is a home, right? Maybe they're just buying a home that will appreciate in value over time, right? I'm going to put Bitcoin up here too, because Bitcoin is an appreciating asset that you can buy at any level, and we'll go over this a little more later. And so what do the elite do? They buy these assets, and they put them to work. They monetize them. They rent them out to little families like you, whether you're in an apartment or a home. You're paying someone who has a better portfolio, a better wealth building strategy. They're financially ahead of you. You're renting assets from them because you cannot currently afford one of your own right now, right? They're putting them to work and they're running that as a business. And so over time, these homes or the stocks that they have, whatever that may be, right? Over time, they appreciate in value. That's number one. The homes are not appreciating in the crazy value like the stocks would, but the stocks are appreciating in value, right? And the assets they own, like the homes, they're generating them an income. Okay? And the income that's generated is used to buy more assets and to look good on paper for your business. You know, you're making money, it looks good. The assets appreciate in value as well, and you can use that equity, both of these things together. You use the income to buy more of the assets, and you use the equity to then leverage the assets as collateral, which means that you're keeping loans on your homes, and any equity you have in the home, you would pull out to obtain more homes or more stocks. Think of like Elon Musk, right? These guys with just unfathomable money in stocks. They leverage debt against their stocks. They don't sell. They're not paying taxes on these stocks. They're taking out debt strategically because debt is tax-free. They're borrowing against their net worth. They take on this strategic debt, and over time, because remember, we do this to begin with because the dollar is not backed by gold. It's getting printed to record levels, down to worthless paper that you can wipe your butt with. And over time, your debt is no longer as scary as you even thought it was, right? It's the exact same reason that like you go to the grocery store and things are literally just more expensive because your dollar's worth less. So you need more dollars to buy what you want. So that is good for debt because if your debt is, let's say you have like 10 grand of debt, 10 grand of debt today is a lot different than 10 grand of debt when your grandparents bought a home for 50K, right? The numbers are just completely, they mean different things. They completely mean different things, right? What's important is you use this debt and you make it a good debt, right? Think like rich dad, poor dad, right? We're using the invested money to buy more assets, right? And then you rinse and repeat the whole thing. Or eventually you get old enough that maybe if you don't have any kids or anything and you don't have it in a trust and you're not passing it off to your bloodline, you just fucking exit out of the whole real estate business and boom. Now you're literally just, out of the game, living on all the money until you die, right? Maybe that works for you. That would not work for me. I want to monetize this stuff forever. If you are buying Bitcoin, this is us. This is us, right? The normal person that can't just be buying a couple homes a week, right? We're not a giant corporation like BlackRock. We're buying appreciating assets like Bitcoin that they can't control, they can't take from us. It's permissionless, instantaneous. There's a max supply. It cannot be inflated away from us. And we put these assets to work. The primary job at the beginning is the fact that it's getting us away from inflation. And that in and of itself is a great way to put Bitcoin to work, is the fact that it's hedging us away from the dollar's downwards trajectory, you could say. And then we can put this asset to work. You can put Bitcoin directly into DeFi, liquidity pools if you wanted to. For me personally, I would basically be jumping over here real quick. I want to touch base over here. My Bitcoin is not going to generate an income directly. Actually, it will. Let's talk about this. Put the assets to work. Bitcoin, we are going to lend out. A site like Aave, where I have Bitcoin lent out over here. There's 22 grand sitting here, big chilling, right? In Bitcoin. We put it to work. How is it working? Well, first off, it's being lent out and it's making about a 0.07% APY, which is nothing that's going to change your life. But it is working. It is working. And more importantly, it is now becoming a collateral asset. So, although it is generating a little bit of returns modestly on itself, over time, it is appreciating in value. Now, here's where the game gets spicy, right? What I do is I use the equity in my Bitcoin to then leverage that Bitcoin and get strategic debt. And this is what I mean, right? Where I'm able to then borrow against my Bitcoin. And in this case, there's just $5,000 borrowed. I pay 5% a year to pull $5,000 of debt out against my USDC in the dollar that will go down in value over time, right? It's going to get inflated away. USDC is pegged to the dollar. And what I do is I take on that debt and I put that back to work in assets that generate income. I loop this process back, which, just to make things more fun here, let's just do that. Assets that generate income. And that's where I'm getting involved in our DeFi, our liquidity pools, where I'm a place like this, where USDC to ETH is doing 120% a year. I'm making 10% a month off, let's just say $3,000 right here. It's making about $300 a month, right? And this scales. If you have $1 million, this is unfathomable money for you. If you have 100K, and you're making 10% a month, you're making $10,000 a month, right? In this position right here, much less all the other ones, right? And so that's where we're putting our assets to work. I'm generating income off of that initial Bitcoin by borrowing against it and using that debt to generate more income. And that income I then use to then get more assets, more of the Bitcoin I want to hold, which increases the equity. And then I can borrow more and borrow more and borrow more. Does this make sense? It may not make sense. I will touch base on this again in a second. But over time, inflation reduces that debt. Where this 5K, like I talked about how 5K back when your grandparents were kids, probably a lot of money. Nowadays, not really. It's not really the same. Not really the same. This isn't even a down payment on a house anymore versus when your grandparents were buying houses. They were probably 50K. It was 10%. Now this is like 1% of a house. And you invest the debt that you're taking and use it to buy more assets. Assets that this time are going to generate income. And you use the income to buy more of the initial asset, the appreciating. And you create this loop and you repeat the cycle with a larger asset base, nonstop, nonstop, nonstop. And for me, there's no reason to really exit sell unless you're trying to time a top on Bitcoin and get some out at 125 and then be buying back in this buy box down here at 80K, right? Like that's the game there. We're not exiting long-term like with a house where houses and homes are illiquid and it's just insane. Whereas crypto, we can pause for a bit and come back when the market does retrace. Now, this might make it a little simpler looking at this graph over here, which ignore these numbers down here. This is from our master class today that we did in our private community. But this is another way to look at the exact same thing. You're taking your active income. You're protecting it away from inflation in assets you want to hold long term, like Bitcoin. Okay, Bitcoin linked over here on Aave. And what we do is we borrow the dollar, which gets inflated away over time. We borrow that. We borrow that piece of junk right there. And we put it to work in pools that will make us money. This is an example we found in the live stream of just what people were talking about on the call. Another example, right here, ETHUSDC doing that 10% a month. So maybe it's not the 15, let's say this is 10%. 10%, so this would be, you're making $2,500 a month in cash flow, and 75% of that, I don't even freaking know, I gotta use a calculator, my brain hurts. 2,500 divided by, times 0.75, fucking idiot. That's going to be 1875. So you're taking 1875 and you're buying Bitcoin with that every single month, and you take another 625 over here and you would stack stable coins on the side. And it would be like that simple. Where literally you take your Bitcoin, you lend it out, you borrow against it, you monetize your debt to make 10% a month, you take 75% of your earnings, and you use this just to buy more Bitcoin. You loop that shit in there, you get more of the asset that's appreciating over time, you increase your asset value, you have more equity that you can borrow against when the market, in your decision to do it whenever you want. I would suggest borrowing at market lows to increase your leverage that way. And 25% of your profits you take and you just stack stable coins for whenever the market does some bullshit like this. Boom. Because crypto is very volatile, okay? Homes are not. Homes are not the same way. Homes are not going to drop 30%, overnight, hopefully, unless it's like a financial crisis, right? You're not going to just 30% on this month down. Like, no, that's crazy, right? And houses don't even have the liquidity to be moving like that, right? It's just not the same game. Okay, it's not the same game. Which, someone joined our private community about, it was this week, I did their onboarding, and they're pretty big in real estate, right? And they're talking about how, they're comparing the per door cost of a home, making like 300 in cash flow, whereas you can be making 300 in cash flow on freaking $3,000 over here, right? And I just had to remind them that, like, hey, your home's not going to cut in half in a month or two when we go through a bear market, okay? So it's important to know that your equity and your entries still matter, and you are exposed to these assets. So you want to make sure it's quality assets like Bitcoin, Ethereum, Solana, etc., right? So your home is not going to fluctuate, but Bitcoin will, and that's the game. You have to have this long-term vision where you're buying the appreciating asset. You want to do it at good prices, buy at good prices, DCA, buy all the time. Put those assets to work. Start monetizing your Bitcoin. Use the strategy I just showed you. Borrow against it, put it to work in DeFi. Make 10% a month. Use that income to buy more Bitcoin. It's going to appreciate over time, and you'll increase your equity, and you can borrow even more against it to keep taking on strategic debt at good times in the market. I recommend borrowing, taking out debt when Bitcoin's low because it is so volatile. Don't borrow too much. Exactly. USDC becomes poo-poo value over time. You invest it in more Bitcoin. You buy more Bitcoin. You rinse, you repeat, and you create this infinite flywheel of Bitcoin that literally just makes you money nonstop. Nonstop printing. You buy Bitcoin with capital that you earn from your active income at your job. You buy Bitcoin, you put your Bitcoin to work, and it works for you, and it creates this infinite system where eventually it grows to a point where this now starts to actually change your life. If you have, let's say you had 500K in here, right? Let's just add a zero to everything. 250K, 250K, $25,000 a month. Like, that's insane, guys, right? That's insane. If you had 500 grand, borrow $250,000, put it to work, make it 10% a month, you're making $25,000 a year, even off just this, $25,000 a month, even off just this example. And that means that you're buying about $18,000 of Bitcoin every month, and you stack $6,000 on the side, which is probably more than a lot of people's active income. That's just your side bag for just in case anything happens. Rinse, repeat, profit, and then you're financially free. Once you get to this point, you're financially free as fuck, right? I think most of us would agree that if you're making $25,000 a month, that you now get to focus on purpose and not survival. Okay. So if this makes sense, guys, you have any questions, drop them in the comments. If you want to work one-on-one with me, again, 130 members inside our community now. There's a link down below. You can click to apply. Hop on a call. We'll see if you're a good fit. And if you are, we'd love to have you inside where I'll teach you and help coach you one-on-one to make that 10% a month, to start to scale your portfolio and get it to cash flow and compound to where you actually can then focus on living the life of your dreams, whether it's just alleviating financial stresses in your life or focusing on mission, where you can focus on YouTube, doing stuff like that, where you can focus on your purpose over just surviving and trying to not lose all your money in this market. Let's win for sure. Let's buy assets that are going to win long term and print. Let's print, baby. Cool. See you on the other side, guys. Click that link down below, and YouTube says, watch this video. It's that way again. Man, Loom's crazy. See you there, boys.